Welcome everyone to DeFi Crypto and Airdrops. Let me throw Jeff up on here. Jeff being difficult.
As always.
Let's see. Uh, everybody else shows up and gets in their little square like they're supposed to, except for Jeff. So how you guys doing?
Am I offline? I have to do something.
I can see you. I can hear you.
Yep, you're all there. All right. Let's see.
Center the screen share things offline.
Yep. No, we're had some having some technical difficulties with X. We weren't able to, for some reason, connect to X. So apologize for a little bit of a disheveled beginning here. Let me see if I can even get my freaking screen share to save or to freaking work.
Yeah, because on mine it just shows me offline.
Oh, well, that's fun.
Well, yeah.
And I'm about to ask. I actually prepared with a question for the crypto gods to answer. So, because I don't know what it means for Jack Swan.
Here we go. All right. Finally. All right. So, all right, let's get this show on the road. So, those of you watching, just on Rumble and YouTube, we don't have X going, unfortunately, but you're probably already on the YouTube channel, so you don't need to follow us. You're probably already following us. We also have my X account that, obviously is not working right now. We're not live on it, but follow me on X at veteran, the number 4 crypto. We'll jump right into DeFi Llama. I brought up the entire decentralized finance TVL, DEX volumes, perps volume, and stable coins. So you can see, everything is steadily climbing. We're gaining TVL, we're gaining volume, we're everything's on the upswing. Stable coins, anyone that's been in the market, for more than a little bit knows, as they mint more stable coins, they're basically front running liquidity coming into the market. There needs to be a stable coin for every dollar, of value that comes into the market. So, that's always a good indicator of liquidity coming. So we have RWA.XYZ. As always, private credit is front running the RWA market, followed closely by U.S. Treasury debt. So, all of that's being onboarded, and a big part of that is Plume is moving up in the ranks when it comes to growth. Plume is number 1 out of all networks in the 30-day. It's grown 126% and has a total value of $101 million. It also has the highest RWA, not RWA count.
Michael, I want to address the question that someone brought up, and I thought it was a really good question about a place like Plume or Ondo. Their argument was the coin itself does not affect at all the RWAs. So why buy the coin when it really isn't going to be involved in?
Where are you seeing that? Why is there so many freaking?
Michael, can you hear me?
Yeah, I can hear you. Can you hear me?
Yeah. So why would, like Ondo or Plume, why would I go and buy the coin if it doesn't really affect the RWA platform at all?
It's just, it's a gas token, and and also it's a way to earn. So you have to spend Plume to to tokenize an asset, to to use the network. So anytime that
it's like
somebody,
XRP.
Yeah, well, it's like any, it's like Ethereum. It's anytime that you want to use the network, you have to pay to use the network, and in this case, it's Plume, and also anytime that an RWA states real estate, art, stocks, bonds, treasuries, anything like that, is great. If it's been time that asset is traded, then the fees are again going to be in Plume. So the more that is tokenized on the Plume mainnet, then they get moved on the mainnet. Then
Jeff, is the audio going bad for you?
Yeah, audio went bad about 30 seconds ago, Mike. We could. It sounds like you're in a wind tunnel or underground or something.
Yeah.
we might have to
Oh,
bag this.
there you go.
There you go. That's working.
Yeah, we might if we keep having issues, we might have to bag this because we're not going out to all the different places. We're having all kinds of technical difficulties. But
But we might be getting cyber attacked somewhere.
yeah. So I'll summarize what I said. Basically, Plume is a gas token. It's just like Ethereum. It's just like XRP or anything else out there. To use the network, you'll need to use Plume. Any tokenized asset, to tokenize it, to buy it, to sell it, to trade it, to do anything with it, you're going to have to pay with Plume. So that's all it is. So and the more it's being used, potentially the more demand that there'll be for it.
Gotcha. That is good to know. Okay, that was my question, Jeff. I thought you want to go over some more stuff, Michael?
Yeah, and this is the Plume network. I just wanted to show that this is since January, February, March, April, May, like the middle of May to now. You can just see the amount of TVL that is being onboarded to onto Plume. So again, it's just there's a lot of growth going on. A lot of these dexes like Nest, Elixir, Super State, Stargate, which is a bridge, a lot of growth, going on. A lot of stable coins. It looks like about 79 million worth of stable coins, 56 million in U.S. Treasury debt or treasuries, private credit. So it looks like a lot more stable coin and treasury debt on Plume as opposed to the overall RWA market that is predominantly private credit. So that's an interesting metric to look at. Here, I'm gonna bring up really quick just a couple of things that are going on and to kind of frame the conversation moving forward this episode. So Brian Armstrong, he's the CEO of Coinbase. He's talking about basically this is the U.S. Government debt, and just how it's going parabolic. Debt is growing exponentially. Inflation is crippling entire nations. Economic freedom is declining. It's time to increase economic freedom globally with crypto. Here he's just talking about Circle. Those of you that don't know, Circle is the one that mints USDC, and they just got done with the crypto summit. And Coinbase Concierge, it's and I'll end up wanting Jeff's input on this just because this kind of is his wheelhouse. But basically, it's a concierge. It's an expert dedicated to leveling up your experience, personalized assistance, fast track issue resolution, and strategic support tailored to your goals. So basically, it's an offering that they're going to have on Coinbase's platform to help you. And what they're going to be helping you with is stuff like this. U.S. perpetual style futures coming July 21st to Coinbase. No quarterly expiration dates, spot price tracking, embedded leverage, and 24/7 availability, all on a CFTC regulated U.S. exchange. What are your thoughts on that, Jeff?
Well, firstly, that's far out of my wheelhouse, right? Because I certainly am not a commodities trader, an options trader, a futures trader. But in general, I think I know this goes against sort of one of the ethos of the crypto community. But as a financial professional who carries liability and fiduciary responsibility, I think the idea of anything trading 24/7 is terrible. Terrible.
Jeff's like, I'm never going to get any sleep.
Maybe not crypto, but when it comes to anything that's derivative of a real world value, because what you're doing is you probably are going to introduce a tremendous amount of extra volatility in all these different asset classes, right? Because there's now movement in any given time. So something that you'll notice, I mean, just generic economics, or maybe I should say behavioral economics, is anytime a company wants to release bad news, right? When do they do it? They usually do it after market hours on a Friday.
Yeah.
Because they want there to be a couple of days to kind of absorb, so there's less of a chance of a knee-jerk reaction. Doesn't always work by any means, but like imagine the back and forth of the futures market, or rather, if at least from the retail perspective, because there's still dark pools and all kinds of things. But I'm grateful that when we were bombing the crap out of Iran, people weren't trading stocks during that moment, right? I think was it a Saturday or whatever it was? I don't know. But I guess what I'm getting at is it's a very I understand the appeal, right? It's always there. It's always on. You can get in. You can get out. But it certainly complicates to some degree how you manage risk, right? I mean, right now, actually, somewhere the futures are traded 24/7 anyway through the futures markets. But just in general, the idea of tokenizing it so that everybody anywhere can have access to any kind of financial instrument at any given time. When do you sleep, right? When do you feel like it's okay to take? I mean, there are definitely days in my past, particularly 08, 2022, 2000, 2002, where you get real happy when the bell rings. Like, all right, well, the world might continue to end tomorrow, but I get a break from 3 to 8 o'clock, right?
I mean, that's valid. I mean, we're moving into this tokenized, digital 24/7, 365, movement of value. But, what's that going to do to, people's involvement? Are we going to start leaning more heavily on AI? Are we going to start having AI agents that are, learning, maybe, like you as a, financial advisor or whatever is, maybe you're, building out your personal AI agent that does your work while you're not. I mean, Taylor,
Right. Then you get into, well, so Taylor is licensed as an attorney. I'm licensed as a CFP and an investment advisor. My AI agent isn't. His isn't either. Right. So as long as it works, cool. As soon as it doesn't, what kind of liability? I mean, I can totally see a world where it's like, well, you let your algorithm made a decision without oversight, and it cost your clients X amount of money. And so not only that, but your E&O insurance that covered you for malpractice says, well, we insured you, not your AI agent. I mean, this is from a purely intellectual standpoint. The next, assuming we don't all blow ourselves up, right? We don't get Skynet or something. The next 10 years is going to be potentially the most interesting of all time, right? Because we are inventing new dynamics almost on a daily basis. And with that, the ripple effects are so unknown. Nobody has any clue how to project any of this stuff, right? Speaking of ripple, not to completely get, but I do want to ask this because I saw this morning on Twitter. I'm going to pull it up because I know just enough to be dangerous about this. But I was smart enough to bookmark it because I knew we were having this conversation. So there's a lady I follow on Twitter named Amanda Fisher, and she's a former SEC chief of staff, and she's been an advisor to U.S. House and Senate, and she does financial policies at Better Markets. And she posted that a Judge Torres is telling the SEC and XRP to basically stop playing. And the quote is, let's see if I can get to this. Apparently, a ruling came down. So Judge Torres in the Ripple case denied the joint motion with the SEC to vacate the injunction and to reduce XRP's penalty. A blistering decision where the judge makes clear that existing securities law applies to crypto and the Trump administration's change in policy doesn't persuade her. Now, this is a district court judge, is my understanding.
Yeah, Judge Torres has been heading over the XRP SEC lawsuit for years now. Back when I held XRP through the bear market, and she's actually been pivotal in ruling in XRP's favor as far as it not being a security when it comes to institutional to retail purchases. But institution to institution is still out there. They're still trying to figure out, how that plays out, if it's a security or not. So, there's still some things to be decided in that lawsuit, and but this is a much more crypto friendly administration. So,
Oh, for sure. I mean, it helps when the president has his own coin, right?
Absolutely, absolutely. So yeah, Taylor, actually, this is something that's more your wheelhouse, and I kind of want to make sure that we touch on this. So the Freddie Mae and Freddie Mac came out and basically said that U.S. Federal Housing Finance Agency orders Fannie Mae and Freddie Mac to count Bitcoin and crypto as an asset when assessing mortgage eligibility.
Oh, that's going to be big for people because, for a long time, people have not been able to include. So young people, we actually had a closing. He was very, very wealthy in crypto, like tens of millions of dollars, but everything was in crypto. Young guy. And so he really struggled to get a loan. He had to sell off a lot of his crypto in order to get enough down in order to actually get the loan. So that would be huge for someone like that. That hey, they're allowing you to now use this as part of your ability. It's going to open up some interesting things of how people can do that. It's going to be interesting how these mortgage companies are going to have to learn all the crypto world of how things work.
There's going to be a very steep learning curve, and I think that it potentially, with how fast they're moving with some of this, there's gonna be some messiness because there's so many nuances, in traditional finance. Like Jeff was just talking about, before we brought this up. There's just the fact that things are going to be able to be traded, bought, sold 24/7, 365. It sounds like a great thing, and some of us feel it is, but there is pain points to that. With this, okay, so you can use crypto assets for your mortgage. Does that include Fartcoin? Does that? No, for real though. You know what I mean? Is Fartcoin's a crypto and it has a value attached to it. People are buying it and selling it. Is that going to be included?
I mean, I got to tell you, dude, this is so reminiscent though of what we did almost 20 years ago. Where you're starting to look at every hook. And I'm not saying this is in no way impugning crypto as a legitimate asset. My concern is this is evidence that Wall Street elite, i.e. the investment banks that back, the large lenders, are looking for any way they can to expand the pool, right? Of potential borrowers, because they're continually creating and generating loans. They want to sell that financial product. They want people to buy. And as we've seen we all know in the real estate market right now, it's not a seller's market, right? People are not moving the way they should. There's something like 45% of all mortgages are below 3.75, and those folks are not giving them up. And so this, to me, reeks of desperation to pull more people into the marketplace. There's other stuff unrelated to crypto completely, but they're already talking about lowering the requirements to get a mortgage, to increase the debt to limit ratio, to increase. And every time we've gotten more and more lackadaisical in an area like this, eventually we overshoot and have a crash. So I'm color me skeptical on, not that crypto shouldn't be an asset, but on the motivations of the people that are moving it that way, right? It's not the crypto community that's doing it. It's the banks that want to get people more in debt.
Yeah.
Right? Yeah. No, it's true. And something that Patton McCrotch brought up. That's Drew's dad from Blockchain Basement. He says tough to put a locked value on an asset that swings 30% on the daily. So yeah, Taylor, I mean, you can definitely speak more intelligently on that than I can. I mean, what's your thoughts on using volatile assets to potentially back a mortgage?
I mean, the mortgage companies are the ones that are going to have to accept it. But I mean, mortgage companies. So to understand how the industry really works, banks aren't really holding these loans. What banks want to do is they want to package up the deal and sell it off to the Fed. And so, in order to do that, you have to do everything correct, and it has to be buttoned up tight. And so, if they make one mistake throughout the process, then the bank has to hold that mortgage indefinite, as the longer the term is, whatever it may be, 30 years or whatever. So banks don't really want to do that. They just want to make their fees, sell it off, and then be the servicer of the mortgage. So in this situation, if the federal government's coming in and saying, hey, we are willing to look past any issues here, the problem is really going to be for taxpayers if this does, really screw us over. The banks aren't going to get hurt. It's the taxpayers that are going to be left holding the bag. However, like one of the big issues right now that I have a serious problem with is if you go buy a mortgage right now and they have PMI insurance on there. Before, if you dropped below, you had 20% equity in the house, they got rid of your PMI insurance. Now, if you start your loan with PMI, you can't remove it.
Without refinancing. Well, it costs, most of the time you're going to refinance, it's going to cost you $5,000 in fees. So, whatever you can do to figure out to get 20% equity so you don't have to pay PMI insurance when you're getting a loan on a property is incredibly important, because that's hundreds of dollars every month that you're paying into basically complete waste for you. It doesn't do you any benefit.
Well, I know on my VA loan, I was able to get rid of it because of the VA loan, they backed the loan, so I didn't have to get the insurance.
Yeah, so there are certain loans that have certain benefits, but most people's loans are FHA loans. So little things like that used to be like when I was doing estate planning, 5 years ago, one of the things that I wanted to see was like, okay, can I get their PMI insurance removed? Because, if that's $200 a month, I just saved you $2,400 in a year. Just because we were able to go, well, you have 20% equity in your house right now. Now I just can't do it because it's like, well, you're stuck with it. So I guess you can go refinance, but it's going to cost you about 2 years worth of PMI insurance in order to do that. And you're going to pay a higher rate. So like trying to figure out little things that you can help people out on is if you can somehow, use your crypto in some way to establish 20% equity, that would be wonderful for people. Be able to maybe go loan, 90% of whatever you have, just so it looks like you're really wealthy. Put it all in Bitcoin.
I think a semi-intelligent way to do this, in my opinion, would be they probably would have I could see where they would say, hey, if we're going to use this as an asset, they might want to lock it for a period of time to where you can't immediately, use it for DeFi or immediately trade it or whatever.
Yeah, use a smart contract.
But if I was doing it, if I was the bank, and I put, I don't know, like 30 seconds of thought into this, so I'm sure it's right. I would probably say, okay, let's just say somebody has, we can even use Bitcoin, right? So for argument's sake, and I realize it's a granddaddy, people have all kinds of coins, but let's say it's Bitcoin. I would probably say, hey, we're going to look at what the low point is of Bitcoin in the last trading year, right? The last 52 weeks. And I don't know what that is for Bitcoin, but let's say for argument's sake, it's $50,000. Then I would probably take a discount out of that. So if you told me you had $100,000 worth of Bitcoin, I might count it as $40,000.
Yeah.
But the reason
they already do that in DeFi when you do loans,
right?
The loan value. Like
Well,
they'll do like
they
70%
also
or
do it in so because there is precedence for this in traditional securities markets where you can buy stock on margin, right? So you can have, let's say, you have $1 million or $100,000, it don't matter, but let's say you got $1 million worth of Costco stock, right?
yeah.
They'll let you borrow usually up to 50 cents on the dollar against your portfolio while keeping your portfolio invested, as long
Yeah.
as it doesn't fall by some metric, and they've discounted to some, as long as your margin doesn't get called.
Yeah, you have like a liquidation level.
They definitely, I mean, it definitely can be done. It just needs to be done in a way. I mean, somebody in the comments said, "Hey, you got butthole coin, you immediately qualify for a mortgage," right? It's just got to have some kind of rationale behind it that's somewhat stress tested, right? It needs to be something that doesn't just go to complete crap. And I think also the other thing is people are still going to have to qualify on cash flow to be able to pay the mortgages, right?
Yeah, but honestly, like right now, let's say you're going to go buy a house and you have 13% for or you need about $8,000 more. I mean, I imagine most of these mortgage places don't understand that you could turn it into USDC and go get a loan for, of USDC of $7,000. And it looks like you're worth a lot more than you are in order to get a loan for a property. And so until they figure out that, hey, you can basically get loans in crypto pretty easily, you're probably going to be able to, trick the system in giving you loans. Now, I'm not saying you should do that. I want people to understand, I'm not encouraging mortgage fraud, but let me tell you a story about when I was in law school. So when I was in law school, one day there's a really smart guy that sat next to me, and he was always kind of doing interesting things. And one day we walk into bankruptcy class, and he's sitting there, and the bankruptcy professor goes, "Well, I have no attendance requirement." And literally he grabs his laptop, slams it shut, and leaves. And so I see him later that day, and I'm like, dude, where are you going? It's because when you go to law school, it's supposed to be like a job. You're supposed to go to class. And he's like, I'll show you. So we both get in his car, and I went to Texas Tech, and we drove down this street, and he showed me house after house, and he goes, that house is selling for about $40,000. That house is selling for $50,000. He goes, you can take 3 Texas Tech students and put them in this house and be cash flowing, $1,500, and only have a mortgage that costs you $500. And so I'm like, that's wonderful, but we're both college students.
Yeah. How are you going to get a loan?
And he goes, let me introduce you to someone. And he introduced me to this guy. And this guy is like, he goes, you don't need a job or any assets to get a loan. And so I was like, really? So I went and bought a couple of rental properties.
No, I remember that.
And little did I know he was just making up what I made and, the assets that I had. Now, all my loans were paid back. I did,
Well, you didn't technically commit mortgage fraud. The broker did.
He did, but I signed the documents that I didn't read through. So.
Oh. Well, you had graduated law school. Nobody can expect you to read a contract you're signing. Come on.
Exactly. But, I only got 3 homes. I should have done a lot more. But, that financed a lot of my law firm. My first 3 years of running a law firm was I sold those off and was able to use the cash from them. But he bought 10, and he's already retired. He no longer works. He owns like 100 homes right now. Our buddy went full board into this, and he now owns well over 500 different properties.
Holy shit.
It totally changed his life because, he just did the math and was like, wait. I just got to get renters for these places. That's all I have to worry about. And he started with nothing and was able to pull this off. But I'm not saying we're getting, but that's that back in the day, there was a lot of people who were able to springboard themselves into wealth because they just didn't have access to money. And I was one of those people that was able to use that as a source of being able to get assets when you couldn't get it back in the day unless you had a good amount of money, which a lot of young people today. So that being said, I'm not encouraging mortgage fraud or saying anything, but crypto is like a way to get assets easily where before you couldn't get it, And so if you're young and you're trying to figure out, you be wise, don't just be as stupid with your money. But if you figure out a way to be able to leverage yourself, it's a way to really change your life.
This reminds me of a bit I saw. I'm sure it was TikTok. I mean, I saw it on Twitter, and it was a couple months ago. But these two guys that are clearly like in their like 30s that have a podcast, but they're putting on like this, like white hair, kind of gray hair wigs, pretending to be, boomers. And the guy is like, the problem with these young people, they just don't have any they don't think things through. It's not just about, I mean, I'm paraphrasing, but it was like, it's not just about what you buy, real estate, obviously, but it's about when you buy it, which is why I decided to be born in 1950. So that I would be able to make a lot of money and then invest all of it when rates were at historic lows. And if they would just understand that they should have been born 30 years earlier, maybe they wouldn't whine so much.
That's good.
They got a point, right? It's like, holy shit.
No,
it's nice.
Well, one thing I want to touch on right here, just to kind of get back to the, just kind of how potentially this crypto-backed mortgages could work is, my thought when I first saw it was, okay, say that you have, we'll say Bitcoin, and you're going to use that as, collateral that, you could potentially use a smart contract where I'm asking, and I'm kind of wondering if this is possible, where they could somehow stabilize it to where they, either wrap it, do some sort of stable coin wrap, or I don't know, something to where they lock in that value. If not, do a smart contract to where it locks that, just like here on Aave. You can come on here.
Well, you don't have to worry about that when you get your loan, because you just have to show at a certain date what your net worth is. I'll use an example myself.
Okay.
All right. So let's use this example. So it's COVID. Actually, I remember the day Jeff sends me a YouTube video, and I watch this YouTube video, and it's this guy talking about all these bodies being burned in China because some disease is like rolling out. And I'm like, oh my gosh, I started looking at it. Well, I'm in the process of buying a home at this moment. Okay. So I have put in my application, I've done everything. And, I've told them, here's how much my net worth is. Well, I know because I own a title company but right before I close, I have to show the mortgage company what my net worth's going to be. Mm-hmm. Well, time keeps going on, and I'm starting to freak out because I see China shut their whole country down. And I'm like, this is going to come here. I own two businesses. I have a payroll of $120,000 a month.
Yeah.
And if they shut my businesses down, I'm screwed. And so I'm like, I got to go hedge myself against this risk. So on February 15th, I think it's 2020 or it's 2020, 2021, the year COVID came out. Was it 2020? It's 2020, right?
Yeah, something like that.
February 2020.
Yeah. So February 15th, 2020, I buy $50,000 options on 1 month out, March 15th, on the VIX. I bought call options on the VIX.
Which was a genius idea that we discussed.
Yes. Genius idea.
Just like, I don't want to pat myself on the back, but I might be a genius.
I would if it had a better ending. Continue, Taylor.
So, anyway, I do this. And then, of course, that's like the day everything starts falling apart. And all of a sudden, the VIX starts shooting through the roof. I make like 10 grand the next day. And then I go, oh, shit, I'm using that money as my or not my collateral, but to show that I have enough net worth in order to be able to get this loan and not have to pay PMI. And so I was like, oh crap. Well, I'll just take my profits. I did great, made 10 grand, thought, well, I sell off the position, but not thinking everything through, going, hey, the reason why you did this is because if they close down your businesses, you're screwed. You need the money. If I would have held on to that option on March 15th, I would have had almost $3 million.
Oh, shit.
Because the VIX shot through the freaking roof and it peaked March 15th. Like, I picked the perfect day to buy and the perfect close date for those options. Like, that never happened. Man. And I got screwed over. But it's an example of the problem. If you're going to use your crypto in order to close, you're going to freak out if it goes negative 30. You're going to go, oh, crap.
Before we move on too much, I just would like to point out that when Taylor gets screwed over, he makes 10 grand versus the guy that walked him through the idea of how he should short the market in case we have volatility, couldn't even afford to put anything on the market in the first place. So I didn't make squat. So we have different ideas of screwed over, but continue.
But it's hard to sit there and go, oh, I got to retire. I literally pick the exact right moment. I never do that in any of my investments.
Yeah.
So, using your crypto as to buy a house might be terrifying, and you might make bad decisions because it goes up and down so much. And so it's one of those things of like.
Well, I mean, how do you see this, the mechanics of this working out? I mean, are you just using the crypto to state your income, or do you see that it potentially would be used as actual collateral?
Oh, well, we're moving to a digital currency. So I imagine they're making these rules. So when it's not going to be USDC, maybe it's going to be USD crypto coin is there, you're going to be using that. And so
as collateral, or just to show net worth.
Yeah, maybe show net worth, but also collateral to buying the loan. I imagine it's all going to be done because in all honesty, like if you're the government, crypto is what you want. Like you want to be in control of it first. You don't want.
Oh yeah, I mean that's why everybody talks about CBDCs, central bank digital currencies.
Yeah, because you can take people's taxes out. You wouldn't have to have people file taxes anymore because you can just
no, it would all be automated. I mean, you wouldn't have to file. They wouldn't need an IRS to audit. I mean, it would just all be as soon as you receive some sort of money. If it was an investment, if it was a sold property, if it was income, whatever it was, the system would automatically take it in real time, and it would just, it would just be boom, 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 boom.
Yeah, I imagine.
I would love that.
I mean, it's in force right now for an asset. So I think at this juncture, it's primarily. I mean, I'm looking on Twitter right now. I think it's primarily for this. I mean, the order signed by William J. Pulte, Director, U.S. Federal Housing, which I assume is related to Pulte Homes. It says it is to be determined that the consideration of additional borrower assets and the enterprise's single-family mortgage loan risk assessments may enable the enterprises to access the full spectrum of asset information available for reserves to facilitate sustainable home ownership to creditworthy borrowers. So I think it's more about this just counts in your asset column. It's not counted as what you're using for income. Although what's interesting about that is I'm not sure. I mean, Taylor, this is not my area of expertise. Do you really have to have assets to buy a house? I thought you just had to be able to be employed or have a cash flow from your business and cover the debt load.
Oh, they want to see your net worth too. I mean, that's calculated into like everything is like, oh, well, but ultimately if you have enough income, that's the primary thing. But you don't want also somebody that has plenty of assets that can, but doesn't have high income, not to be able to get a mortgage. It's not.
And I kind of want to tell the audience the reason that this is so important, this topic, and why I want to, wanted to talk about this for this episode is a lot of us that are in crypto, we are wondering, how we can leverage our digital assets without having to sell them. Ways that we can, diversify and, multiply our wealth. I mean, that's what this Thursday, every Thursday we want to do this show. That's why, I want to have Jeff on and Taylor on every time, is because they are subject matter experts on these things. Debatable, but subject matter experts. but but the thing is that if you can have or hold Bitcoin, and you can, like the platform that I'm showing, and you can borrow against it without having to sell the asset, so you still have exposure to the asset, but you can get liquidity and put it to work. Or if you can, in this case, potentially, buy real estate using your crypto without having to sell it, then, I mean, this is a game changer. This is a way that you can, just like you can, take out a loan on your house, to get, liquidity to buy another property or to, invest in something. That is why this is such a game changer and why we're talking about this. So I just kind of wanted to, kind of explain why it is that this is, such a big deal.
Yeah, let me tell you a future prediction what I think is going to happen. I think when they have they're going to force everybody to do payroll through the U.S. crypto, whatever they call it in the future, in order to pull out your taxes. And if you are an employee, they're going to pull out your taxes directly and then make you file for a refund.
What?
Yeah, I think that's how that's exactly.
That's just a hypothesis. It doesn't mean it's going to happen. But
I'm like, if it's automatically coming out, it should be perfectly calculated.
Your W-2 is anyway. You have an election form. They're withholding your taxes anyway right now from your paycheck.
Yeah, but you can ask not to have your income taxes withheld. Right? And then you just pay it at the end of the year. And a lot of people do it that way because you have other things that you want to write off. And so one of the big things, I don't think they can do it with businesses. I think they're going to solve the problem with businesses, but they're going to be able to identify very easily fraud that's committed. And I think they're going to change things significantly and try to be able to just pull money out and go, well, you got to prove that we're wrong.
Oh, I was thinking about this the other night. I randomly woke up at like 4 a.m. and I have no idea why this is what I was thinking about. But like, if we really did get, let's just say that, in 5 years, 10 years, yeah, there's still all the different crypto ecosystems. But if the United States is operating on a digital dollar, it can then be going into stable coins, that can go into other cryptos or whatever. Because obviously, having a digital dollar doesn't mean we can't print money. It doesn't fix things the same way a constrained crypto like a Bitcoin might.
Yeah.
But what happened? Like, do auditors just go out of business? Do accountants? I mean, like, there's a whole bunch of white collar, high end jobs that are basically based on who got the money, what they do with it, and where'd it go. And if it's all on a ledger, between that and AI, like, those jobs are poof.
Yeah. Taylor's been talking about this forever in our old show. We talked about it multiple times. AI, robotics, blockchain technology. It's a lot of automation. On assembly lines and stuff like that affected blue collar workers. Mines. A lot of technology like that affected blue collar workers in the industrial revolution. This one is a digital revolution. It's Taylor talks about the fourth turning and things like that. This one's going to affect white collar workers. You have AI, you have robotics, you have this blockchain technology that, like you just talked about, Jeff, it's going to replace accountants. It's going to replace the IRS. A lot of government workers. It's going to replace a lot of people. And if one of you has it available, you can look at unemployment right now. It's going up, substantially. Yeah. So, it's a very real thing. And, we're going through a very abrupt change in our financial system and our society in general right now. So this is Aave. This is the leading platform in DeFi for borrowing against your crypto assets, taking out loans and also borrowing out your assets. So this is kind of where my head went when we were talking about the mortgages. Is you can go on these platforms and they have loan to value. In this case, 73% loan to value ratio. Your liquidation threshold 78%, and liquidation penalty is 5%. And then here's the borrow info. So it gives you all the analytics on what's going on. And this is I pulled up lending if I wanted to lend, but this is what I'm talking about. Like with Bitcoin, you can take up to a 73% loan to value ratio. But if Bitcoin dips more, below that threshold, you lose, you get to keep the loan, but you lose your, your collateral, so you'd lose your Bitcoin. So my thought is, would we be able to use, in this case, Bitcoin, use it to get a property, also lend it out, earn yield, use that liquidity from that loan that you take out, because you lent it, you're earning, you can borrow against it, you have liquidity, and use that to do something that buy another property, buy more crypto, just leverage on leverage on leverage almost.
Yeah, I think you'll be able to do it at the beginning, and then someone will like overdo it, and then they'll pass a regulation that you can't do it. So it's a beautiful idea to do it. Like, okay, at the beginning when they do allow it, if you're looking to get some rental properties, maybe go into the scammy mode that I was when I was young, and pull it off and get some properties for yourself, and then if everything gets changed, well, you didn't commit any fraud because at the time you were allowed to do it.
Oh man, grandfather clauses are great. Getting in,
absolutely.
Rule changes, but you did it before.
Yeah.
No biggie.
All right, so we have 8 minutes left because I know you two are very busy, and I want to be respectful of your time. So let's do some closing thoughts. Jeff, closing thoughts. What are your thoughts on just what we talked about in general and where you see all this going, and potentially opportunities that you're starting to see?
Well, I will tell you. I mean, everybody in the chat is going to think I'm a complete moron, but remember, I'm liable for other people's money. So yeah. I actually purchased some Bitcoin ETF for the first time for a client the other day. No, I broke my Bitcoin theory, but it was because it's really been this political regime change, right? Because I think thank you. I couldn't have done it by myself. I think the thing that has always kept me kind of back is not really the theory of crypto. It was the idea that the government can't, having experienced this myself, the government can make arbitrary decisions all the damn time that make no sense necessarily and can completely impact your life. And I don't think they're going to give up anytime soon their methodology of operation, their SOP, which is print, which is directly in contrast with how
modus operandi or whatever that is.
How it works, yeah. Whatever they're. So I think there has been, I would say, the last 3 years, there's been a significant shift in the institutional space for the appetite for these asset classes because the retail wants it. And the reality is this, it's a simple analysis is, well, you know what, if BlackRock's making money on it, if JP Morgan's making money on it, right? If Merrill's making money on it, if Goldman's making money on it, not to be a cynic, but they sort of own our government. So I feel relatively safe in the short to intermediate term. There's not going to be some massive left-turn regulation. And the fact of the matter is, again, I'm not even going to bash our president. I do that enough. But he has a meme coin. Well, if it's okay, I mean, until that goes is a problem. I think this is I think the runway is wide open, and I am extremely concerned. And I'm going to show you this really quickly if I can click share. The reason I did it is somehow you got to hedge. We got to hedge this market we're in. So check this out. This is a valuation matrix. I know it's hard to see. I don't know if I should.
Hold down control and use your mouse wheel. You can zoom in.
There we go. Oh, I went the wrong direction. It's not really popping up for me. That's all right. Here's what I want you to see. And I'm going to hang that call up. This is a scatter plot, basically, that shows valuations. And we are currently at the highest future total 12. This is the actual subsequent 12-year nominal annual total return. So over a 12-year period of time, what was based on these factors, what did the market do? If history holds, we're looking at a negative 3.46 annualized rate of return on the S&P 500, historically speaking, from this point forward over the next 12 years. So we are so far beyond the norms. Here's the basic point that we are at a higher valuation in the overall stock market than we were in 1929, than we were in 1999, and then we were in 2021 when we had the correction in 2022. It doesn't mean AI
basically the bubble.
Yeah, the bubble can always get bigger. I'm just saying that we are now in truly unprecedented territory. And the other thing I was going to show you is this, which is really just makes you want to throw up in your mouth a little bit. Check this out. This is compensation of employees is the blue. Mm-hmm. The red is profit of companies. So profit of companies are basically at all-time highs. Mm-hmm. And how much we pay our employees is at all-time lows as a percentage of profit. Mm-hmm. So we have gotten so skewed to the owner side, the capitalist side. I'm not against capitalism, but the 1%er side. This is where the wealth divide comes from. This is why we have all-time people are buying more and more yachts, yet more and more people can't pay their cell phone bills, right?
Yeah.
At some point in time, this has to correct. And when it does, I want my clients to have real assets. I want them to have crypto. I want them to have a lot of different things besides standard, have ETFs or have mutual funds. I mean, I this morning had a conference call with an institutional investor that's doing data centers, the real estate for data centers and wireless towers, right? That's a real tangible asset. I like those because the stock market is scaring the crap out of me right now.
That's good. That's good info. So Taylor, real quick, what's your closing thoughts?
My closing thought is the realization that the worst investment, the worst thing you can do right now is hold dollars.
Yep.
Yeah.
All right. That is the worst thing you can do. You're going to be losing 7 to 10% a year. It is a guaranteed loss of 7 to 10% a year. That you have to realize that you have to figure out ways to get your money out of just dollars that we're holding in an account. I'm really, really excited for this idea that we can use crypto, and I hope the government does switch over this. I know there will be more interference, but this idea that you can quickly hold money in other places other than the dollar and move it out and move it back and forth, and maybe have smart contracts doing it. But the realization, you have to get it in your head that I'm losing 7-10% on my checking savings account. I have to get it somewhere else. I got to figure out what I either got to buy a house. You got to do
just to break even.
Yes.
Guys, so, I saw a chart. I can't find it. I saw a chart this morning since January 1st. Oh, it's right here. Look at this. I'll close with this. Check this out. This is just sad. See this chart?
Not yet.
Yeah, there you go. That's the U.S. dollar index, which is weighted against a basket of foreign currencies. This is January 1st. We are down 10% in 6 months. The dollar is
Oh,
10% less compared to an average of foreign currencies than it was 6 months ago. This is a 40-year low for us.
that's crazy.
Yeah.
Yeah, people. If you're listening, you definitely need to start paying attention to what's going on. This is my closing thoughts. You need to start paying attention to what's going on, and you need to diversify as much as possible. I know we all have different, means, but there's rough waters ahead. And me personally, that's why I'm in DeFi. I have my military retirement, but it's a fixed income and it's not outpacing inflation. So, I have to hedge against inflation, my retirement in any way I can. And that's why I'm in DeFi. And that's why I am, earning is, I'm started out with 15 grand. I'm up to $40,000 in my DeFi portfolio, over the past 6 months. I'm earning $215 a day, $6,453 a month. So about 77 grand, a little over 77 grand a year, with current rates. But, you know, everyone needs to start somewhere. If you can come up with a couple $100, $1,000, and you're able to, that expendable income, and you're able to get into some full range pools, some lending, things like that, start building out a DeFi portfolio on the side. And, by all means, follow us. We have a great community, people willing to help. And, see what you can build, because this is residual income and DeFi is here to stay. I mean, you look at the news daily and, they're building regulation for it. Banks are getting involved in it. They're building out applications. It's here to stay. It's just a matter of if you are knowledgeable enough to adopt it early, get in early, and start earning early, you're going to be the one that benefits most from it. So with that, thank you, Jeff. Thank you, Taylor. I appreciate you. And we'll see you, everybody, next Thursday.
Take
With
care.
that, Veteran Crypto out.